Help capture the history of our markets by contributing to the John Lothian News GoFundMe campaign to support the Markets Wiki Education history-focused video series and more.
Well, the plan was I was actually going to be a chartered surveyor. So, I had a history of building within the family and went the whole through to school. Didn't really know what I was doing, but my father got me a job, a sort of day release at John Lang, which is a big construction firm in England. They were going to sponsor me to do day release chartered surveyor exams and go down that particular path. At the last minute, Lloyd's Bank came in with a job offer that I didn't think I was going to get for sort of double the money back in 1988. So I abandoned the chartered surveyor work and went to start working in the high street banks up in the West End. So that's where I started. That's what the plan was. But 180 degrees away from what the intention was. I did a few weeks at Lloyd's Bank down in the West End, and it wasn't for me there. And then I completely forgot that I had a job offer with NatWest in the city. And the NatWest sort of sent me a chasing letter going, look, am I still interested in joining their management scheme? So I was like, oh, absolutely. Yeah, I want to get into the city. So they put me into a branch in Threadneedle Street. And so it was a big old Victorian sort of banking hall, great big high ceilings, wooden counters. And I sat in there for 4 or 5 years now. And the lunchtimes would go, banking hall would be busy. And all these guys kept coming in with stripey jackets. And I was like, what is this stripey jacket thing all about? I had no idea at the time as a sort of 18, 19-year-old. And then after a couple of years, I'd finally figured out what the LIFFE trading floor, and I was, started doing a bit of reading. I thought, wow, this looks like an incredible place to work. I have no idea what's going on down there, but it looks mental. And, wouldn't it be brilliant to have a go? So that's really how I sort of first became aware of it. And then just one day out of the blue, NatWest had closed a couple of branches. Everything was being consolidated into call centres. Everyone was becoming an insurance salesman. They wanted everybody in polyester shirts and ties, and I was quite used to me Thomas Pink shirts and ties, so I wasn't really for changing in that department. And then just out of the blue one day, there was an advertisement in the Evening Standard advertising for floor observers to go and work on the LIFFE floor. And so I thought, crikey, I've got to apply for that. So, no email or anything back then. So I put in a written application. Sure enough, bang, back came a positive response, got called for an interview, and went through probably what was the longest and most arduous interview process of my career, that ended up getting an offer and starting work on the floor. So I started in probably, I think it was early 1994, and I worked on the floor the way through to sort of midway, I think it was through towards the end of 98. So I saw, the continued expansion and also the whole transitional, as you saw the decline going through. I worked for LIFFE itself, so I was a floor observer. I mainly worked in all the options pits. So that was the LTOM or the back wall, as it was affectionately known, where all the FTSE option stocks were all traded, as well as the BTP, the Italian debt, German Bund, sterling and gilts were the main pits that I used to circulate around. In 96, we took over the London Commodity Exchange. And that was just like, what a transformational sort of day in your life that was, going down there. You'd gone from the LIFFE floor where it was all hustle and bustle and everybody was competing and fighting with each other for every scrap of business, down to London Commodity Exchange, where everybody said, oh, hello, good morning, how are you? Everyone was like sitting down all in a very relaxed environment, trading potato, wheat, sugar, coffee, and commodities like that. That lasted for sort of 6 months until those products were all put online and brought up to the LIFFE market. But really that transitional period saw me through all the options pits, and including the FTSE as well, which used to be quite a lively pit on certain days when the figures in the markets used to move. It used to be quite exciting on the first Friday when the non-farm payrolls came out. So everybody would go out for a spot of lunch, all get in the mood for it, and then all hell would break loose depending upon whether it was plus or minus what the analysts had predicted. And then really in 98, the change happened when there was a rollover of the Bund futures. I think it might have been the March-June spread was trading and some colossal volume was going through it. But basically it was everybody sort of squaring up and getting out of their open interest positions in London and transferring their position onto the Deutsche Börse. And it was as black and white as, the last day of trading of March, say on a Friday, and then you come in on a Monday for the first day of trading of the June, or the full day of trading, if you like, June being the front month. And that was it. There was nobody in the pit. It was just completely barren. And that was when, you really got hit with the sort of train blow of bang, this is it, electronic trading's here, because Deutsche Börse have been heavily promoting in London. They opened an office just up the road from us on Cannon Street, heavily trying to get people to go in there a market make. And really, it was just not long after there that LIFFE appointed Sir Brian Williamson to sort of come in and take over as, I think he was executive chairman, if I remember correctly, to really drive the transformation and change. And it wasn't long after that I got the tap on the shoulder and asked to go upstairs and work with the IT team and really begin to look at how do we take this floor-based market into an electronic market in sort of what is probably uncharted territory at the time in 1998, to have something where you've got all the market makers and all the order flow going through one book and on quite a heavy volume as well. While there were early pit trading electronic sort of systems out there, in terms of building something that could cope with the flow of orders and price injection, market making, etc. We were very much at the cutting edge at that time. When you look back, there were maybe like 3 groups of participants that really pulled the whole project together. Ultimately you had the existing floor trading community, so they had to adapt to survive and change their ways in which they were going to look at how are they going to prepare themselves from having their paper-based books with all the Greek calculations in it on the options front. You would have then a whole new community of screen and sort of vendors pop up, like Pat Systems, Easy Screen, etc. Sort of guys who were from the floor, like Phil Dockers of this world, who built up Easy Screen and created a trading platform interface, if you like, to connect to the LIFFE API. Go into the trading engine. They were as critical in the success of the business as we were as LIFFE ourselves. And then the third category was really the exchange itself in terms of the groups of people there. So we had a couple of hundred people working on the engineering of the actual software, the network, the infrastructure, the data center, and everything that goes with it. And there was probably around, I suppose, the peak 8 to 10 of us from the floor who'd gone upstairs effectively. At the time, I think we were based in the Stock Exchange Tower, working with all the development team on the version of electronic trading. And it was quite interesting. We were guys off the floor who never really even used email, had no idea about technology, but you understood the concept of buy low, sell high, and how all the options transactions took place and how you price things up. And then you go into a room and you've got all these IT guys. You don't know what they do or what they get up to. All you ever knew is the systems didn't work, so everybody in IT was rubbish. And all of a sudden you're thrust into this environment of working with these guys who quite clearly were very bright at moving packets of data from A to B quicker than anybody else, or building algorithmic training and allowing price injection and putting strategies together. They wouldn't necessarily understand the concept of buy low and why certain things would be triggered as a result of an event happening on the market. So really, when you put the skills of IT sort of professionals together with guys who really understood how the floor worked, that was the initial driving force for how LIFFE Connect became about. LIFFE invested heavily. They had a very strong project management team from a group called Barclay Partners, I believe is still going. They came in and program managed the whole thing top to bottom. We took an awful lot of internal staff off the floor, a big project team, but I guess when it came down to it, there was sort of 8 to 10 of us working on the operational side in terms of answering the telephone, dealing with members' queries on day one, being able to track what was going in the market. We had a couple of the IT guys on the help desk, if you like, next to us, who were monitoring the performance of servers, gateways, network, etc. And then when you join all that together, that was the the day one big bang, which I think from memory was around about November 98, when we migrated all the equity options. It's probably the smallest part of the market, but equally it's probably almost one of the most complicated parts of the market, because you didn't just have one contract trading. You had effectively 100 plus equity option stocks, all trading calls and puts, all the different strikes with all the different strategies across quite a few participants in the market. So that's really, so I think there was sort of three groups of people. So the trading community itself, the external software developers for the platform, and then LIFFE itself as a company building that marketplace, and effectively, I guess, retraining all of its staff to think and operate in a completely different way from that sort of experience of being on the trading floor. When it comes to testing, again, we were brand new to testing. Whilst we brought in testers in a system like this, which had never been tried, in our business before. Certainly, you had you did as much what you might call negative testing. So how could we possibly break the system by doing something? Because there's always going to be somebody out there in the trading community who would do something that caused a problem. And I just remember the first crash that we had when it went down. I can't remember what day of the week it was, but you're like, well, what happened there? What went wrong? All the systems offline, all the phones light up. What's wrong? It doesn't work. Systems broke. And really what we did then, we just went back to the old-fashioned audit log, no different from going to the video room when there's a mistrade in the pit over a particular number. Going through, where you go through the videotape, you'll have a look at who said what, who waved at who, and what the hand signals were to work out actually what the transaction was. Same thing now in the electronic world, so we went back all through the system logs, and then we saw the very last message prior to the downtime was actually somebody putting a date on a trade that was in an American format and not an English format. And as very quickly, the development guys went straight through the code and realized that was a problem using a US format. So quickly changed that, restarted everything, and then, hey presto, we were back up and running again. But that was always a memorable event, for how to find it when it went down. But bit by bit, experience after experience, we built a more robust and obviously ultimately a very successful model that carried us forward for the next few years. There were two camps really, I guess. I think when I look at the trading community, I remember Sir Brian Williamson sort of standing in the big cafe life sort of environment that was out in the atrium area, and sort of hold a forum with all the traders and say, look, I'm sorry guys, it doesn't matter what you say, the end is upon us, right? Floor-based trading is going to die, and we have to do something about it if we want trading to remain in London. And it doesn't matter what you say, we have got to go down this path. And there were then, two set of traders, obviously traders whose livelihood, they weren't happy about it. They were locals. They realised that this is now becoming a big boys game. It'll be an electronic market controlled by banks and the investment in technology, which is what proved to be the case. Who obviously weren't happy. There were the guys who worked for the banks who were like, well, they were indifferent because it didn't matter. They just mean that they weren't on the floor anymore. They'd be behind a desk on a trading floor in an office somewhere. And then there were other floor-based traders who actually could see the potential. And especially, that we had a healthy number of Americans working especially in the options pit, who'd probably seen a bit more technical advancement, say in the Board of Trade or the Chicago Board of Equities. And they could see things coming as well. And so they were off building systems or building interfaces, trading platforms, if you like, or support price injection models to go with the opportunities that electronic trading was going to present. So from that perspective, in the trading community, it was split between those camps. I think when you look at the LIFFE staff itself, a lot of the staff were like, well, this is the end. I'm not an IT guy, I'm a floor person. So, what do I do? But again, it took me personally, no longer than a day, from being, oh God, I don't want to go upstairs. I don't want to go and work with the IT guys. I love it down here on the floor, to being up there for the day going, wow, this is the future. This is where life is going to be in the next few years, and I'd love to be a part of it. And so you had people like myself who openly embraced it, and we had plenty of lads that we worked with like, you know what, it's not for me. I'm going to go off and do my own thing in my own way and find a different walk in life. So it's really interesting when you see it. And we made some amazing lifelong friends on the floor. And some guys are out there; they've still got amazing jobs working in all the big banks, and other guys have drifted. I don't know where they've all ended up now. A lot of it in the early days was trying to sort out, how do you settle some of the options contracts? Because when you were on the floor, it was quite easy, especially when you're coming up to expiry and people are trading cab or very close to expiry options. You would know mentally that this value had been trading thousands of times over the last week or two. Then even if somebody come in and highballed it by sort of paying $1 more for something, you would just sort of settle through that where actually all the open interest was. Whereas all of a sudden you go on a system, it's a lot harder, especially in the early days, to get it to really understand where the volume was and where the real pricing was. And it was a lot easier then when you could have 10 traders all stood around in a pit all discussing where value was and how we should go through the settlement process. When all of a sudden you're in a room, they're all in their own rooms, and almost you're having like 10 individual phone calls, and then you publish some prices and everybody phones up again and disagrees and argues with where you've got your theta, gamma, vega, sort of all your values keyed into your own sort of price goals type of model. So that was quite an experience for probably, a good 6 months after go live, of trying to get to the point where we would begin to get a consistent look and feel to how we were settling on a daily basis based upon the open interest and based upon where activity had gone. So that was quite a challenge, I think, for the first few months once we went upstairs. It's also a completely different way of working, now having to answer the phone, making sure as soon as the phone lights up, you never had to answer the phone before when you were standing in the middle of the pit. So lots of new things came about as a result of that. But I think certainly settlements was the biggest challenge. And then equally, I suppose, in the early days when there was a technical glitch or a problem, there were so many places that the problem could be located. It could be the network, it could be a problem with the members front end, it could be our trading engine. And equally, at the end of the day, more often than not, it could be a problem with the file transfer that went over to the London clearinghouse with all the settlement prices. And again, because we were doing so much so quickly, the knowledge of all of this was in the hands of maybe 20, 30 people at max. And it was more the individual skills of all the people that LIFFE employed behind the scenes that kept everything together, especially in the early days. I suppose it's no different from today, but you go back then and we didn't really understand what price injection models, what damage they could do the way that they were being used. What was happening was, so we built the platform which allowed you to put bid in, offer in, okay? And we were sort of designing it on the basis that people would ask for a quote, the market makers would respond and put, 10 bid at 12 or whatever the price was in. And then obviously, as time progressed, people began to work on their algorithmic models and realized that actually there's nothing in the system stopping you putting in 50 quotes or 100 quotes or 100,000 quotes at any one particular point in time. And there was no restrictions in the early days about how wide your bid and offer was. So whilst you could put in 10 bid at 12, there was nothing stopping you putting in one bid at 100 and flooding the market with all this traffic. And at the time, I remember, I think it was called a Sun E10K. I think one of the IT guys might have to correct me, but it was like a filing cabinet. And it was like the most advanced piece of equipment that Sun were producing at the time that we could actually run the trading platform on. And the way that Connect was designed at the time, it was multi-threaded. It could take in a huge chunk of quotes, but ultimately there was only so much processing power. What must be 21 years ago, that a piece of kit like that had. And so you then got to the point and it became a lot more noticeable, especially when you went on to futures as well, where people were constantly updating and refreshing their order books millisecond after millisecond. And I think we were getting to the point at times when I was still active in the operations center, where we were at points getting like 200,000 requests for price changes coming in a second. And that's when a lot more controls started to have to come into place because you'd have the actual trading engine, the application itself, and there'd be the ability to process all of those order book changes at any one time. Because not only was it a price change, if people had left a stop in the market, if all of a sudden trades triggered, the complexity of when one especially if you're working like butterflies, condors, and multi-legged transactions. As soon as one of those legs is executed, everything else changes. That impacts all the price. So there was a huge amount of work for the processing of the engine to do, the application itself of liking it. Then it was the hardware, and whether it had the processing power to be able to spin the disks that fast to do everything you wanted. But then also it was the network. These days we all take it for granted with gigabyte connections at no cost at all. But back then, putting in what was an E1 circuit to give you X amount of bandwidth was thousands of dollars, even if it was just going 200 yards up Cannon Street. So, that's when actually all the market making controls and market making agreements began to creep in to sort of try and stay on top of the price injection. But yeah, it gave you a huge amount of instant market discovery. And if you fast forward to where we are now, and you look at the way in which even the spread betting firms, with all their prices, everything instantly updated, everything is a millimetre wide in terms of the bid offer spread. It has come an awful long way from the early lessons that we learned about, actually what is price injection.
John Lothian News would like to thank those individuals who have contributed to our Markets Wiki Education GoFundMe campaign. Their financial assistance allows us to produce and distribute videos like this for our Open Outcry Traders History Project or the Path to Electronic Trading video series. Join them in supporting John Lothian News, capturing the history of our industry.